Good afternoon, everybody. Welcome to today's Stock Market Brief Show. It is Monday, the start of the week. I'm doing a quick video today, just a little update. I mean, this market went absolutely bonkers. To S&P 500 hit up 3%. Nasdaq Composite was up almost near 5%. Nasdaq 100, 4% here. All the sectors were basically up other than the kind of risk-off type assets such as utilities, consumer staples, and so forth. So we're going to kind of just navigate where we stand within this weekly expected move. And I wanted to update you too that tomorrow I plan on doing a live stream throughout the trading session. We do have CPI data coming out tomorrow. So I'll be trying to do this live, maybe not on the initial announcement there, but in the morning. We'll go through individual stocks. I'll walk you through once again what I've been doing and so forth. With that said, if you haven't done so already, make sure to subscribe to the Stock Market Brief Show, my channel. This is where we navigate the financial markets through the lens of technical and intra-market analysis. We talk about market conditions, one of the most important aspects of everything to really determine whether we should be swing trading, day trading, and so much more that we talk about. Now, I want to quickly look at the weekly chart of the S&P 500. It's only day one of the trading week, but we had this kaboom type move today, and so far the week's looking really good. And we've been talking about this pain trade since April, and now it's starting to become consensus a bit. Now people are starting to use the words, this is the pain trade. But if you remember, you got to be prepared ahead of time. That's the thing with narratives. Like, you typically hear more and more people talk about it when everyone feels comfortable talking about it. It's the times where you're really fading consensus where you start to get leveled up. Me personally, get a lot of trolls. So when we talked about the potential for a bear trap, right, a bull trap way up over here. I go back to those movies over in those times, right? We're getting trolled like crazy. And then over here, right, we talked about the pain trade and how the market hitting a new low. I don't think that was really a painful event because I feel like people were preparing for that to happen. And what caught people off guard was the move that went straight up to darn near flat year to date. And right now, as it stands, where do we kind of determine this? So what do you do if you miss the move? What do you do if you've been in the entire move? And you got to really kind of sit back and take a step back after such a strong move and don't make any quick decisions. And the reason why I say that now is if you're missing a move like this, right, that's basically straight up, we closed at the highs today. This is a weekly chart, but we closed at the highs. There can still very well be some more upward momentum. But as I show this chart with the weekly 5 EMA many times, it's to just show you that when you get pretty extended from the 5 EMA, you can snap back, right? So when we got very disconnected from here, we snap back, right? We got extended from it, we snap back, and so forth. And that could also mean that we just go sideways, right? Up and then sideways, and this starts to catch up. But there will become a time where we reconnect with that. How soon it is, obviously, I don't know. But if it were to come back in, you'd start looking at potential gap fills to be levels of potential support. So like I said, we do have CPI data tomorrow. I do want to call out something kind of interesting here that we just got our second official follow-through day today. You can see more volume than the prior trading day, and the day on the S&P 500 was up 1.2+%, right? It was up 3.3%, so that definitely counts as a follow-through day. And when you see a follow-through day like we saw here, and now you're back to another follow-through day, that's positive things to see. What you don't want to see is start to stack on multiple distribution days, and a distribution day is a down day with higher volume than the prior trading session. So what we're seeing here seems to be like a little bit of chasing the markets higher. We close at the highs. Where can we potentially find resistance? I'm going to be mapping out the expected moves for the month, and then for the week, which we're above right now, and then the daily implied moves going into tomorrow's trading session. So you can be aware. Now, I do want to call out something interesting that what's a potential path of this? We always like to look at potentials, and right now, there's not really a reason to be bearish. And if you follow me on Twitter, one of the things I said was, if you're trying to short this market right now, I understand why. Chances are, if you're trying to short the market right now, my estimate would be that you miss this move and you want to try to catch and play catch up on a move down. But really, when market conditions start to shift, it's typically easier just to wait for the pullback, and then when it comes, you buy strength back through. And that's what market conditions are telling us right now. So yeah, can we pull back? Obviously, things are getting frothy, things are getting extended. But in this current context, if you're trying to short it, like it can still get pressed higher. We've been showing CTAs, we've been showing vol control funds, we've been showing key gamma levels. And it's just something that I personally just would not really be too focused in on at this current context. Now, if this is like a 2022 type of movement, right, where we had this wave down, bounce, wave two, and then we came back and we clipped through this high over here, and the 50-day was sloping down, the 200-day was there. If you go back to 2022, we did have a similar type move, right, where we had a 1-2 wave down, boom, we clipped through, back above the 200-day and the 50-day, which had that bearish crossover, and we clipped through this high over here. And what happened? Well, we ended up starting fading and breaking down further, and it really is holding that statute kind of like look. But yesterday's video, we also showed, or the last video I posted, how it also could look like 2011 and how it could also look like 1998 going into the dot-com bubble and went a lot higher. So as it stands right now, I want to just reiterate, we're in positive gamma territory. This is one of the more important aspects here when it comes to market conditions. I want to remind people in February 21st, it was, I believe, this day right here, or a little bit after that, maybe this day, I can't really quite remember the exact day, February 21st, that was when we flipped under the gamma flip line, and we've been underneath it throughout this entirety of this trip. And up until recently, we started getting back above the gamma flip line. And the reason I state this is because when you're below this gamma flip line, the dynamics of dealers really do change. You start to see when you're below it, selling but gets selling but gets selling, buying but gets buying but gets buying. So you get exaggerated moves, which we saw, right? And you get volatility to typically increase and liquidity to dry up. Now, on the flip side of this, when you're above the gamma flip line, this is where dealers look to buy the dip, sell the rip. And you know, if you're an intraday trader, I'm already seeing it again. When conditions start to change, right? When conditions start to change, and if you're an intraday trader and it starts to go positive gamma, you're used since February 21st, you've been used to big wild swings intraday and catching some of these trend moves, celebrating, posting screenshots. That's all I've been seeing on X. But now, as soon as we start flipping to this gamma flip line, and these intraday traders that are trading futures or prop firms, all of a sudden they're posting losses and they don't understand, they're blaming themselves and all this stuff. But what they don't have is ability to understand and navigate when conditions actually change. And however you do that, it's up to you. One of the things that I use is this gamma flip line. It lets me know that, hey, conditions could be changing. So as we flip through this gamma flip line, I started going crazy on more of a swing trading standpoint. I started getting exposure back into these markets. I started looking for stocks that were contracting and breaking out. And so far, it's been good to do that. We originally started getting more exposure in the market on this very first follow-through day over here, not because that this is the holy grail of finding stock market bottoms, but every stock market bottom, every correction, every bear market coming out of that to start a new bull market has had a follow-through day. So it's common to hear me talk about it when it happens. And, you know, William O'Neill, who's the creator of it, or the finder of discovering this, or who did the research, it's very common to add some exposure back in and then add a little bit more and then add a little bit more. And until you get stopped out of more of these positions, or if we fall under the gamma flip line, you're trying to catch the move and as much as that move as you can. It's not about finding the top. It's not about finding the bottom. It's about catching the middle really of that move and in individual names that start to kind of find strength before the S&P 500. I'm rambling on today because I don't have that many charts, but yes, we are above the gamma flip line. Now, when I look at gamma structure here, there's some critical levels that you want to pay attention to. That's going to be 5,800. So you really don't want to right now at this moment slip under 5,800. That seems to be kind of the level of support to continue to watch. Now, through that level, we want to look at 5,900 and 6,000 as those are starting to grow. So it looks like we have some supporting action for a further upside in the markets. Now, as that's taking place, we are already outside of the weekly expected move. In fact, we started our week out there. We came back into it today, and then we started to bounce from it. We're not too far off the month-to-date expected move for the S&P 500, and that's 580, 583. So if you're buying the S&P 500 in and around this area, you know, just be cautious up here, because if it comes down, you just got to be aware that even if it came back down to fill this gap and just like this, I mean, that's still not necessarily bearish. That's pretty normal stuff. But if if you got to be okay with saying, hey, if it comes through 590 and you're buying it and then all of a sudden it drops down, like, are you okay with the consolidation, with the pullback, or are you going to, get freaked out, puke the position, and then it's going to turn back up in your favor? Or not in your favor, I guess, if you puke it out. If you take a look over here, this is when the announcement kind of came, when the futures market opened up, I guess, and we really started ripping up higher. I went ahead and anchored a volume weighted average price on just a 5-minute time frame of S&P 500 mini futures, and you could see we kind of held above it, bounced, and then intraday today we kind of doodled from it and then broke higher. So my thought is maybe keep an eye on that VWAP, because if we start closing under that, closing under the SPX 5800, I think maybe perhaps we can see some downside, catch people a little bit off guard, maybe for 50 points or so. So that would be kind of the key level that I'd be watching. As it stands right now, we're above that weekly implied move. The daily implied move going into the CPI report can bring us up to and around just around 590, 588 to 590. And that would also take us to last year's closing price, which would make S&P 500 what? Flat on the trading year. And that would also be in confluence with the upper month to date expected move. So my thought is, if we get that follow through coming into and around these areas, I'll probably be also trimming some of my stocks that I have. I have quite a few positions on right now, and I'll be taking some of that profit, and then I'll be waiting for the consolidation. I'll be resetting it up. I'm not in a rush. If we start breaking down, consolidating more, we're still above a rising 5-day moving average, and I'd be looking for strength from that. And, potentially just getting pinned in and around this weekly implied move for some consolidation throughout the rest of the week, and then kind of go from there when we have some more data. As it stands with like the bullish percent charts, we're frothy on pretty much all of them. BP, CO, and PQ, right? RSI is overbought condition. We have, and by the way, once again, overbought can remain overbought, but just be aware that there will come a time where it comes back to oversold. It always happens. When you're overbought, it can come to oversold. When it goes overbought, it can go oversold. Okay? So look at BP SPX chart, also getting pretty frothy up into and around that 75 to 80 range. It's typically when it crosses back down through 70 as it gets a little bit more, we see a little bit more consolidation or of a pullback, and the RSI is in overbought condition there too. BP NDX chart, it's moving into that overbought condition, still not there yet. And then the bullish percent chart is getting rather frothy here too. ANFO, which is the technology sector, this one still remains in overbought conditions and still holding a pretty high level here too, as the market has just cranked higher this last couple of days. And then the INDU chart, also an overbought condition as well. So we have a lot of these index products, bullish percent charts, they're getting frothy. Makes sense, right? We saw the market react positively so far to its news. We're still open to more news drops coming out. Be aware, we do have CPI data coming out, which can also shake things up in this market. So you just need to be vigilant. Look for the good setups that have low risk to potentially good reward and play in your favor. If you want to come into the Discord and you see some of those trade ideas that I posted, and you'll get an idea, right? It's not an alert service, right? If you come in here, but you'll get an idea of some of the charts that I look at, that I post. I share my tight list, which are the stocks that are contracting, that offer up good risk to reward. On last video, I posted the squeeze list. And, one of the main names that took off on a squeeze, I posted also in trade ideas, AAOI was the ticker. That thing launched. I mean, that thing launched what, 20+% today? Take a look here. So this was the post. This was the only one from the squeeze list that I kind of posted. And, this thing fired off like a rocket ship today. AAOI. So we posted this one yesterday, and, we saw a gap up and some follow through today, and some of those other squeeze names look really good. But we have a bunch of different names in there. You just still got to manage risk. Don't be chasing anything, and focus on the 4 things that you can control, and that's what you buy, when you buy it, how much of it that you're buying it, and then when you sell it. I hope today's episode gave a little bit of insight. I'll be live on tomorrow's trading session, so be sure to tune into that if you want to see how I look at this market from a live perspective. See you later.